Of all the questions I have received since focusing on retirement planning more than 20 years ago, and as I continue to meet in person with 20 to 30 savers a week, these three questions, which are worth repeating both today and for the next 2 weeks on this show, are certainly the most important questions that savers must have answers to if those same savers expect to be worry-free in retirement. I mean, let's face it, if you are retired or thinking of retiring soon, how in the world can you sleep at night not having an understanding of how much Uncle Sam will take in the way of taxes from your 401k or other taxable assets? How can you get a good night's sleep not knowing if you truly have enough money to comfortably retire? And then finally, the frightening prospects that everybody worries about, and that is literally one day running out of money. Today, we are focusing on the first question: how will taxes impact your retirement? Now, this question is especially important for savers, those savers who currently have much of their life savings buried inside those pre-tax savings accounts such as 401ks, 403bs, TSPs, or IRAs, because as you might now have learned by now, the lowest tax rates in the history of this country will expire at the end of 2025, which means the money you will owe in taxes when you go to take this money out of these plans at some point could be, I say could be, much higher in the future than they are right now, which begs the question: between now and the end of 2025, what are you going to do about it? Do you have in your corner an independent retirement planning firm who understands tax laws and how to use financial products and strategies to keep more of your hard-earned money in your pocket? Or are you going to just wait it out and hope the taxes remain at these historic lows? Well, rather than sitting around and hoping for the best, let me take a few minutes to explain the options we use at Tony Walker Financial to help our clients in planning for taxes in retirement. And again, folks, these may or may not be right for you, but they are options you should at least consider. All right, the first thing is something I refer to as a spend-down strategy. Now, most in the financial world really don't understand this or understand why in the world people would want to spend their assets, and I'll tell you why. The financial world is rewarded by you not spending your money. So it begs the question, why are you stockpiling all of this money for the future with no plans to spend it, knowing that, number one, the fees are going to eat away at it, and then number two, the taxes are just going to grow as the account grows? This is a strategy I outline in my latest book, Live Well, Die Broke. It's unique to the financial world and something most in the financial world either don't understand or, again, would rather not talk about it. Something I talk about again and remind people is you don't want to wait too long to spend this money. Number two would be something called a Roth conversion, which we've covered in extensive detail on this show. Warning shot over the bow. Everybody's pushing Roth conversions. Really something you want to take a look at, but be very careful on Roth conversions. Number three, RMDs, required minimum distributions. A lot of planning strategies that we bring to the table that, again, a lot in the financial world do not understand how best to use the RMD strategies. Number four, something called qualified charitable distributions, or QCDs. A wonderful way to keep money off your tax return, assuming you give a lot of money to charity anyway and you're over the age of 70 and a half. Again, we can help you think through if this is a good strategy for you. And finally, my favorite, gifting now versus waiting until after you croak. Folks, this makes no sense. Again, our grandparents kept a lot of money and they were afraid to spend it. Well, that's because they came out of the Depression and they didn't have all these tax-infested 401ks, but you do. So I'm just telling you, again, pick up a copy of Live Well, Die Broke. You need to have a strategy in place to start gifting money now versus trying to leave it when you die, because the tax tumor is just going to get passed right off to your kids. So how do you know which of these strategies is right for you? Well, there's only one way to know, and that's to have a free game plan set up where you and I will talk in person to determine if any of these strategies could help you lower your taxes on your retirement account. So do this right now. Take advantage of something we call the free 10-minute fiduciary phone call, where you and I will talk briefly to see if we can help. And if we can help, we're going to set up that no-obligation appointment to meet in person at either our Bowling Green, Louisville, or Lexington, Kentucky offices. So log on now, TonyWalkerFinancial.com, or give us a call anytime at 877-499-9255.
Thanks for watching. We hope you enjoyed that video. If you'd like, check out these other clips. And be sure to hit that like button and that subscribe button for more videos.